As expected, on December 12th, the European Central Bank lowered its key interest rate for the first time this year. At the same time, GDP growth forecasts for the eurozone in 2024 were downgraded. Likewise, the statements from China's authorities yesterday did not generate much enthusiasm in the global markets, which was hardly surprising. Beijing again repeated its promises to maintain stable growth rates for the Chinese economy. Apparently, under the current circumstances, the main, if not the only, winner is the US dollar. On early Friday, its six-currency index rose above 107 points. Over the week, it has gained more than 1.1% and is set to close Friday the 13th best performance on months. It seems that nothing and no one can stop the dollar's growth right now, not even the December rate cut by the Fed Reserve. Meanwhile, over 96% of the market anticipates a rate cut next week. After all, such a decision by the Fed Reserve has already been priced in and factored in the asset values. Traders had also previously factored in the ECB's rate cut into the euro's market quotes. Nevertheless, its exchange rate against the US dollar closed in the red for the fifth day in a row on a Thursday. Over the week, the euro weakened by 1%, dropping to its lowest level since November 26, hovering around 1.0458. The euro's decline could have been even steeper if not for yesterday's US economic data, which revealed a sharp rise in unemployment and an increase in consumer inflation. The initial unemployment claims support a Fed rate cut, while the CPI data, given stable core prices, appears to be a temporary phenomenon. As a result, the euro made an effort to recover on a Friday. The euro-dollar pair is trading around 1.0450 today. A bullish correction could push the price to test the technical resistance at about 1.0515. However, the euro is then expected to head downward, carrying on with its decline within a bearish correction. The potential target for this move is the area below 1.0335. A cancellation of the bearish impulse for the euro-dollar pair would require a strong rise and break above 1.0635. While the euro's outlook for December seems clear, its prospects for 2025 remain uncertain. For instance, the European Central Bank is not yet ready to declare victory over inflation. Our mission is not yet complete, ECB President Christine Lagarde stated during a press conference. She also listed several possible factors that could drive prices higher in the eurozone, including significant wage and corporate profit growth, as well as geopolitical risks that could sharply increase the cost of energy and transportation. Importantly, problems within the government of France and Germany do little to bolster the stability of the European economy, with the governments operating in minority callings. The ability to function effectively has been almost paralyzed, as a passing legislation under the conditions has proven nearly impossible. The Eurozone's economic slowdown also risks becoming a factor of a pressure on the crude oil. However, on a Friday, Brent crude surged above $74 per barrel, reaching a three-week high and preparing to close the week with a 4% gain. One of the drivers of this robust activity in the oil market was the prospect of a stricter U.S. sanctions against Iran and Russia. The incoming U.S. National Security Advisor pledged to revive the maximum pressure policy on Iran. At the same time, Biden's administration, as it concludes its term, is planning new sanctions targeting Russian oil. As a result, Brent maintained a green corridor between 73.20 and 74.30 in Friday, settling itself to close week with a 4% increase. The dollar-ruble pair responded to rising oil prices with a modest decline, trading within the range of 102.60 to 104.90. While the ruble might record a modest gain for the week, it's expected to plunge by more than 11% for the year overall, primarily due to the Western sanctions, but that's not the only factor. It seems that the Bank of Russia is willing to weaken the ruble to support export revenues. On the other hand, inflation in the country is rising. According to weekly data from Eurostat, as of December 9, inflation had already exceeded 9.3%. On an annualized basis, prices could increase by 20%. The Bank of Russia is likely to raise its key interest rate again in December. Experts suggest it could reach 23%, questioning whether a 2% hike will be sufficient or if the Russian central bank will need to act even more aggressively. Nevertheless, Friday the 13th might turn to be a lucky day for the ruble. That's all for today. We monitor developments in financial markets. Subscribe to our channel and stay up to date with the latest news with us. See you online next week.